you know, you be careful what you ask for, right?
Exactly.
We said we wanted you to give us all these questions, and now we've got like more than a dozen questions that we are trying to find time to answer. So what is the next question, Mike?
Excellent question again, Arjan. It's Melissa from Michigan. She asked, how can I tell if my accountant is the right one to have when I'm growing my firm by at least 25% year after year? Let me answer that, and I know this better than most because I'm the guy who gets to see is the insurance professional. If anyone's going to do anything on their application every year, they're going to say they're growing a little less than they are because the less your revenues are, the lower your premium is. So it is my experience with how to manage a small law firm members that you are growing. Most members grow 25% a year. I've seen even greater growth than that. So that's common.
What is the average? I mean, you're insuring like 3,000 law firms.
Correct.
Right? What's the average small law firm growing? What rate?
Well, at how to manage a small law firm, you're talking roughly 30%. If you're talking outside of that, between 5 and 10%. Very small growth.
Any idea how much the AmLaw 200 is growing?
That I don't know.
2%.
2%.
2%.
There you go.
They're growing their business by 2%. John, what would you do if you grew your business by 2%?
File bankruptcy.
How about only 5%?
Pray.
What is so there's a flaw in the question, right?
Yes.
And the flaw in the question is, what does growing your business by 25% have to do with knowing if you have the right accountant or not?
It has nothing to do with it. We were talking about earlier where your accountant should be meeting in the beginning of the year, because if you wait until the end of the year, it's too late. You're playing catch up, you're playing Scramble City, and this and that. You want to meet with your accountant as a trusted business partner to help develop a plan of growth throughout the year so you can maximize whatever advantages you do.
Right. Your accountant is not just the guy, particularly if he's a CPA. He is
Or the
not
gal.
just the
or
he
gal.
or she,
Yeah,
absolutely.
yeah.
In fact, mine is a gal.
Yeah, or CPAs, yeah.
He's your trusted advisor. He's not just there to file your tax return at the end of the year or bail you out if you get in trouble with the feds. He needs to help you plan for your growth and plan your business for the coming year.
Take an active interest.
Absolutely. He's a partner in your business.
So Melissa, that's the question. Is your CPA, your accountant, is he or she, are they the ones that can do that for you, regardless of
Are they taking an active interest in your business? Do they see the growth of your business as critical to the growth of their own business, such that they should? I would say that your accountant, my accountant, and I don't even say accountant, I say my tax strategist, because we're doing tax strategy at the beginning of the year. We're doing tax strategy. We're planning my vacations. We're planning my hires, we're planning my expenditures, we're looking at my marketing, we're looking at where and how my business is going to grow so we can begin to make tax strategies. You do the same thing.
Absolutely. Cheryl in my office, she's the CFO, because I'm terrible at that, because for years and years, I thought the accountant was someone you would like wrestle or try to have a good boxing match, Mayweather-McGregor type thing. And that's why I fired myself from that, because I'm so terrible at it. And Cheryl meets with them. And once you know, when we did that,
Cheryl fired him.
Yeah, Cheryl fired me. Let's face it, you know. Yeah, let's call it what it is. So there you go. But my accurate thinking. But my whole point is, when that happened, revenue soared. The business started to run as a business.
Because someone was paying attention to the numbers.
Correct.
Budget, cash flow projections.
Correct.
Budget variance report. Accounts receivables reports.
Versus, I make a lot of money, I can do what I want. You know what I'm saying?
Right.
No, doesn't work that way in a business, folks.
How often do you want to meet with your accountant throughout the year, John?
At a very minimum, once a quarter. I want to meet with him as early in January as possible to get planning for the year. I want to see where we're at, actual numbers compared to budget, and I want to stay on track with it. And if something is going awry, I want him to give me the guidance to get myself back to where I need to be and plan tax-wise to continue to grow the business without giving all the money to Uncle Sam.
You know, and we'd hold it.
Yeah, absolutely. Coming at you.
And you know, there's a little bit of a false premise in the question, which I'm going to post the question below on this discussion forum. It's how can I tell if I have a good accountant if my firm is growing by 25% per year? If you have a good tax strategist at the beginning of the year, you can reduce your what's the word I'm looking for?
Tax
Your
liability.
Tax liability.
tax liability,
Yep.
your blended tax rate,
Correct.
your actual tax
Right.
rate. You take all the different tax rates. You can
Yep.
take your overall tax rate. You can take it down from probably 33% down to 25%.
Right.
Right. So
That's substantial.
It's substantial. So you take 7%. Take 7%. Let's assume that you run your business at a 20% margin. And let's just say for every $100,000 you save $7,000 in taxes. All right? I can't do the math. John, can you do the math? $7,000 divided by 20.20. That would be 7 times 5.
1,400.
1,400.
No,
14.
7 times 14,000.
14,000.
Right.
Yeah, yeah.
No,
yeah,
no,
right.
no. It's more. $7,000. If you save $7,000 on your taxes,
Oh,
Right.
it was 35,000.
and you operate at a 20%
Yeah,
margin,
35 grand times
you've
5.
got to gross. That means you've got to market. You got to sell. You got to deliver. You got to listen to blah 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 blah. $35,000 of gross revenue to replace the $7,000 in tax savings. $7,000 in tax savings, 7% on $100,000 equals $35,000 in gross revenues. Who gives a shit how much you gross if you don't put it in your pocket?
Amen.
Hey, I made $1 million. Yeah, but I
have an old Italian friend, and he always used to say to me, Giovanni, no matter what you take in, it's what you put in your pocket that count.
your
He's
account
right.
is
Yes.
true. Who cares
It's
how
not
much
what you
grow?
make, it's how
we
much
talk
you
about we've been in the Inc. 5000 3 years in a row. You know what? It's an important credential. It validates the legitimacy of our business to vendors. It helps with recruiting. A lot of lawyers are very impressed with this. But who cares? We'll do about $8 million this year. Who cares?
Yeah.
It's how much you put in your pocket that matters. Your accountant is the person who should be your champion to make sure you're putting as much money in your pocket as possible. Your accountant and your chief financial officer.
Yeah,
Amen.
and there's one other important party to that relationship. I make sure that my accountant and my financial planner, investment counselor,
And your chief financial officer.
and my chief financial officer all are in communication with each other, and they have permission to talk to each other, because I also want to make sure that my retirement is working to the best advantage it can, growth-wise and tax-wise.
You got your estate planning attorney, you got your financial planner, you got your accountant, and you've got your chief financial officer. These people all have to work together to protect your future.
Right.
Your bookkeeper is not a
No.
substitute for an accountant.
Nope.
No.
Your bookkeeper is not a substitute for a CFO.
Nope.
Your bookkeeper is not a substitute for obviously a financial planner. Bookkeepers are great. I love bookkeepers. I value my bookkeeper.
Yep.
Bookkeepers are
Just
great.
that.
They're
And
wonderful.
they provide good. If they provide good data, then the other three people we just talked about can do their job easily.
Estate planner, financial planner,
CFO.
CFO,
And
Account.
and tax accountant.
Yep.
Other four.
Right.
Is
Yeah.
it 4?
Total 4.
Yes.
Yep.
Okay, I thought it was 5.
Yeah.
Oh, it's
The
tax
bookkeeper would be the
attorney.
Tax
fifth.
attorney. Okay.
Well, that too. Yeah.
All right. I
Great
hope that
video.
answers your question. Beginning of the year.
Great stuff.